Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the financial earnings of Oracle Corporation, which is a major software maker. It is also one of the first cloud computing provider. It is sort of a pioneer in cloud computing technology, and if you have been using the popular tools like Java, MySQL, etc., you are actually using the products developed by Oracle. So this company provides widely known tools, widely used services in the technology domain. So we are going to consider how its quarterly earnings are shaping up for last couple of quarters. In a week or two, we will be getting its second quarter 2024 results as well. Prior to that, we see how its first quarter was and what are the expectations as we are now gearing up or sort of only 2 weeks away from getting the second quarter earnings as well, and we will be also looking at where the share price stands and what to expect moving forward. First, we consider the earning statement of the first quarter, which was released way back in September. And in line with other tech giants, the revenue of the Oracle also saw upward growth in the last couple of quarters. Even the first quarter was quite good one. From the earning perspective, if you are considering the earnings in relation to what it was making a year back, in year-on-year term, it did well. But on sequential terms, the growth was not in line with the expectation. And after the earnings were announced, even after having earned more than what it was earning on year-on-year basis, the share price nosedived more than 10 percentage point, and it was sort of bloodbath. But from there onwards, the pricing share price for the Oracle have sort of stabilized, and it is now trading close to where it was prior to that debacle. And for last couple of weeks, the momentum has been consistently upward, and I feel that looking at its movement for last couple of months, the upward momentum is there, but the upside seems rather limited. So we should be rather eyeing some consolidation on the longer time frame and expect the share price to move in around 25-30% band. So on the lower side, the price levels of around 100 are going to be key, and on the upper side, the level which was there just prior to the release of its first quarter earning is going to be important. Now, if we take a look at these highlights of the first quarter earning, there was growth in almost all the parameters in revenue, in its operating margin, in its net profit. But even after all that, the expectations were much higher, and the company sort of failed to live up to those expectations. And as a result of that, there was negative reaction from the investors as the share price had already climbed up substantially in expectations of even better earnings. The company's slightly less earnings, less income contributed to the sharp correction in its share price. Now, if we go into the nitty-gritty of these earnings report, you can see that the revenues were up 13%, and in constant currency, it was up 12%. The net income was also up 52%. So this is a tremendous jump. And if you look at the operating income was also higher, 26%. So this difference, 26% in income increase, and the net income being 56% higher, is because of this difference in the taxes. For the first quarter, the company managed to make these contribution for the income taxes from its prior provisions, and in those provisions it saw the surplus of these 45 million, and that sort of added up to the net income. But this quarter, that is the ongoing quarter, is likely to see lower net income, and there is not likely to be much growth in sequential terms. Of course, we are expecting good increase year on year terms, but in sequential terms, the net income is not likely to rise. Rather, there might be lower net income in this quarter compared to what the company earned in the first quarter of this financial year. And here you can see that the major part of revenue comes in from the cloud services and licensing support, whereas hardware contributes only 6%. The cloud license and on-premise licensing contributes another 6%, and the services segment comes in at 11%. So for this company as well, the cloud is a major revenue provider, and there the competition is hitting up the other companies like AWS, Microsoft, Google. These are also ramping up their cloud offerings, and here we will have to see how the Oracle competes in this challenging environment. Now, if we look at the cash flow of the company, the cash flow was positive, and the company's net cash position is quite comfortable, with it sitting on more than $11 billion. For the last quarter, there was net increase of 1.8 billion, and that's a healthy cash position for the company. So there is no liquidity crunch, and this is one of the best cash position in this environment. Now we will consider how the share price has reacted in last couple of months, couple of weeks, and also last couple of days, looking at different time horizons. This is a weekly chart, and if we see the share price performance in last couple of years, after this COVID sharp move on the lower side, the share price has consistently gone up and up. The year 2021 was quite an outstanding year for the investors, where the Oracle's share price more than doubled as the demand for its services gone up. But then, as the economy opened up and the tech companies started to see slack in demand, and as a result of that, there was this correction as the revenue declined, and the operating margins shrunk. So that prompted these tech measures to cut cost, go for cost cutting measures, and try to see that the operating margin improves, net income improves, and those initiatives seems to be paying off, as if we consider this performance in a year, the share price has doubled for the Oracle, and on these higher levels I am seeing a limited upside from the current levels. Of course, the momentum remains still bullish. So if you are a trader, investor, I would still suggest to adopt a buy on dip strategy. But for that, I think the price level of around this midpoint is going to be crucial, and that is why I said in my introductory remarks as well that watch out for the share price movement around the 100 levels. So from the longer term perspective as well, the Oracle Corporation shares remains a buy, and from the medium term, it is still a buy, but of course, here at the current levels, I would not really suggest buying. Here, I think we will be better off adopting a wait and watch approach. And again, if the share price corrects from the current levels and it dips on the lower side, then in course of time, we can think about buying it afresh. From a short-term perspective, the momentum has been obviously bullish, and if you are a trader with time horizon of only couple of days, I think the price level of around 113 is going to be crucial, as that is the immediate swing low, and as long as the share price holds above that level, we can continue to adopt a buy on dips approach. But if the correction deepens too much, then of course we will have to give it a second thought. So from all the time horizons, if we have to go for any trade or investing decision, it is to go long, it is to buy. But for that, we of course have to make sure that the risk reward ratio is favorable, and that is a challenging task looking at the current valuations, which are quite elevated, and with a limited upside, we should be bracing up for the consolidation with upward bias rather than expecting a sharp runaway momentum on the higher side. So if that is going to be the case, we will do well to go for buy in dips approach and look for the correction and consolidation afterwards, and go for the long trade on these levels with a good risk reward ratio. So that's my take looking at the current pricing trajectory of the Oracle Corporation. And if you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. I'll be back tomorrow with an equally interesting stock to work with. So do come back tomorrow. See you next time around. Thank you all for joining in. Goodbye.